Well, US markets were largely under pressure on the back of bond yields going up. In fact, we did see the US 10-year yield go up by over 5 basis points in trade yesterday, after which it's come back down a little bit. But we are seeing a lot of pressure on markets as a result of that. We are expecting rate hikes to come through. The RBI did hike rates yesterday by 50 basis points, and the Fed is also expected to hike by the same quantum. And of course, there is an eye on that inflation number, which is expected, US inflation number, which is expected to come out by the end of this week. And that's a global number which markets globally are going to be on the lookout for. Of course, when we're looking at the Dow, it closed around 0.4% lower in trade yesterday. The S&P 500 was down 1.1%, with 10 out of the 11 sectors in the red yesterday. The Nasdaq was also lower by around 0.75%. And what's happening as a result of some of these shifts in rates, right? We did speak about that. And what's happening largely is that applications for mortgages in the US have come down quite dramatically. 7% for the current week sequentially is what mortgages have come down for, 21% lower than the same week last year. So also the refinance demand has dropped again 6% for the week, 75% when we're looking at it year on year. So clearly dramatic shifts coming in where housing is concerned, which is a fundamental part of the economy in the US as well as in India. So and we are yet to see that shift happen in India as of now. So clearly some of the US metrics worthy to keep an eye out for. When we're looking at major European indices, well, they closed lower in trade as well. Fears continue to remain the same broadly around inflation and that US inflation print, which is expected to come through. The FTSE though was largely tempered, down around 0.1%, but the stock 600 was down over 0.5% in trade yesterday. So global markets have gone lower over the last day or so, and that's the general trend, and that's how Asia has opened largely today, other than Japan. The Nikkei has opened around 15 bips higher, largely flat but slightly higher, definitely positive for Japan. But all other indices in Asia are looking at red at the moment. The Shanghai is down around 1/3%, Hang Seng down around 1/4%, the ASX 200 down over 1%, and the Kospi is down around 3/5% in early trade today. Where the SGX Nifty is concerned, it's down around 0.5%. Below that 16,500 mark is where the SGX Nifty currently stands. So clearly negative. The handover was negative. When we're looking at US futures, those two are marginally in the red. So largely negative cues at the moment. When we're looking at commodities, well, oil prices have continued to remain elevated and they've gone from strength to strength. In fact, oil has gone up another couple of percentage points, and it's gone up to around $123 a barrel as we speak at the moment. Gold too strengthening, or rather holding out above that $1,850 an ounce mark. So clearly gold looking at good strength in a week in which US inflation will come into focus again. Bond yields, as I did mention, went up 5+ bips. In fact, bonds are now at around 3.05%. As we speak. Clearly that tailwind on the US 10-year is expected to continue in this week. And cryptos, of course, as bonds go up, cryptos and higher risk assets will come under pressure just like equities, and cryptos have come down with Bitcoin around that $30,000 mark.